Hello and welcome to Leaders of Tomorrow Masterclass, India's largest platform for entrepreneurs like yourself to join us to ask your questions at a national platform to the experts joining us to take in your questions. Today we are talking about the art of doing business in the new normal and how the pandemic really has impacted that. Part 1 today with Varun Sridhar, is the CEO of Paytm Money. Varun, thanks so much for your time on today's masterclass. How 2021 has really changed. 2020, of course, set the ball rolling. You put in place some changes when it came to, your work, what you thought the future could be like, and now grappling with the reality of the second wave of COVID and how business and life, as we know, has changed completely. What's that really meant like?
I still vaguely remember I was in Paris and, I was managing about 12 odd banks in about 12 odd countries. And when we were working there, there's no concept of me going to an office. And the first time there was a railway metro strike and I ended up working a week from different cafes and different things. And I said, to myself, that was an exceptional week where my productivity was higher and life was a bit better. And then, nothing happened and 2020 COVID happened. And, obviously unfortunate on the medical side, on the social side, but it kind of made India rethink that is it worth going and spending an hour in Bangalore, Bombay, Delhi, or whichever city you're in, going and then an hour coming back and, taking the pain of going through the traffic, through the pollution, creating the carbon footprint? Or is it just better to, spend that same productive time with your family, with your friends, or doing something that you really love, or just relaxing, right? And I think that ball was set in motion in 2020 with COVID happening. For many people, including me in India, like I joined Paytm on Zoom. Right. So most of my team in Paytm Money has never seen me beyond what you're seeing me. Right. And most of my team doesn't know, am I tall, am I fat, am I big, so they don't understand. And I think the whole world then, how do you run it? How do you get going when you have to develop relationships? I think this was a question as much for me as for everybody else. But what we've learned over 2020 and as we come into 21 and COVID-2 starts again, we start to realize that work is possible as long as you're taking care of a bunch of things. So are you well planned? Are you respecting human boundaries? Are you understanding the social impact that some of these things are having, right, at homes? Are you willing to be empathetic about things? As I look forward, Sunanda, is this year, in my opinion, where India pivots into being a technology-led workplace? And I think 2020 to 2030 will therefore be a bunch of shoots coming out of this very important pivot that India is doing.
Okay, so you're saying a couple of things that you really need to keep in mind. One is planning, one is the impact that you're having as far as the people around you, etc., are concerned. You and I are privileged, if I can call it that, to be working in businesses and industries that are okay with us working from anywhere. For someone who's logged in today, who's saying, I'm running a plant, I'm based outside of the metro, I'm grappling with things like digital infrastructure. What's your message to them today about how they should quickly adapt to this new reality of working?
Absolutely right. We are lucky. We are privileged, not only because we are in a digital economy, but also I think because there's a social element and an ability to provide infrastructure for ourselves for that, right? Now, if I was an SME or I was a small business in a place where I did not have the similar infrastructure or my business requires me to be physically present, what would I do? I think the first thing I would recognize out there is a very important pivot the user base in India is doing. So whether you're an FMCG, whether you're a manufacturer, technology is starting to come in and technology is starting to tell you, can I shift my marketing? Because all of a sudden there's a new segment that is coming. Now, a lot of SMEs I've known in the last 15 months, and I've just embraced all of a sudden technology. They have said, okay, I can't stop my manufacturing and I need to protect my employees. How do I do that? Can I start thinking about making my employees co-locate closer to my plants? That's a one-time investment, but maybe that allows me to become a bit better. One of the things many good startups have done is to realize that there's this whole internet way of doing business. And that has opened up opportunities. And so my only message to them would be, there is a reality which I think we need to ring fence. And it's not only about COVID. I think it's about other health ailments that in India were always not discussed as frequently as we're discussing today. But I think we need to ring fence that. The SMEs need to ring fence their employees, their families, vis-a-vis that, because If you know somebody's going to travel 60 kilometers a day up and down, the chance of him, it's not only about COVID, it's about road accidents, it's about other health issues, it's about fatigue, it's about diabetes, right? So all those things kick in. So if you don't ring fence, and I think that's a great moment now to ring fence your company, and at the same time, look at a digital business model and say, hey, what can I do now to become somebody different? Or what could I change? And I think I would work on these two pillars very consciously because there is opportunity out there.
So you're saying what should I change as I'm looking at becoming, what you just referred to as the internet way of doing business? What should companies change and change urgently if you are going to become digital first for the future?
Yeah, I think I would start changing my life at top of the funnel for startups, right? Which is if you're a company survives on revenues, and revenues either B2B or B2C are emerging out of what I would call the internet age, right? So if you are able to increase your curiosity funnel at the top, and that I think is the first thing to change quite rapidly. So that's one thing I would change. The second thing I would change is automation. So can I automate so that technology can take over part of what we do as people, right? So can technology come in and take over? For example, I met this very nice agri startup, which essentially said, my biggest problem is to go to my farm and do watering, right? And how do I shift that when I have, let's say, 20 aquaponic farms across multiple places? So they've developed a program to do that. Now, that's meant that the guy who has to manage that piece of work has now higher productivity, but also an ability to be in a place and do what he or she was doing before with much less travel, much less cost, and much less exposure. So I would look at my core business and say, what can I transform using tech? And then I would look at my funnel at the top in terms of marketing, revenue creation, both on the B2B side and the B2C side. And the third thing I would look at is my employees and my stakeholders. So we always talk about employees, but we don't talk about our partners, right? I think helping our partners, our stakeholders, our employees get digital, helping them getting them in a safer, ring-fenced way will help you create that digital/partially digital ecosystem, which is obviously much more efficient but also scalable. So I think that's that's how I would work on, and those would be the priorities.
Our first question coming to us from Varun Kumar. He's saying, are you happy with the kind of wealth creation that's being created in the country today? Is there enough understanding of wealth creation in the country today?
Is India educated enough to take decisions on wealth? That's question one. And I think I'll break your second question, which is India generating enough wealth for everybody? And I think answer to question one is very easy. India produces great journalists, architects, chartered accountants, engineers, but we don't teach financial education to people. And what does that mean? That if I ask a 35-year-old, very successful engineer and data scientist, hey, can you please tell me how would you invest your 500 rupees every month? And I think 90% people would not be able to give a right answer. 9% would take a guess, and 1% would do a very informed decision. And I think the financial education needs to be fixed across India. And that is a dying need, because once you fix that, we are a developing country where money is important, where cash flows and wealth are important. So once we get it, how do you manage it is very important. And I think that financial education is a very important gap. A lot of players, stakeholders, regulators are fixing it, but I think that needs attention. On the second part, is India generating enough wealth? I think India is starting to generate, as we go from a 2.5 trillion economy to, let's say, a 10 trillion economy. My personal feeling is the wealth generation quantum is expanding. The opportunities are expanding. But what I miss a bit is 2-3 segments are getting left behind, right? So the bottom of the pyramid and a bit above the bottom of the pyramid needs upliftment, right? And they need, the wealth creation is not equal anymore. And the gap is becoming starker. And I think there companies like ours are coming in and saying, hey, how can I democratize wealth management, right? If an ultra HNI has access to something and he or she is able to grow his or her wealth at 40% year on year, why should somebody else grow at the rate of a savings bank, right? And I think flipping that for 100 million Indians is a question that people like us are battling with. But I think, is it growing well for India as a country? Yes, it is. But I think we should stop looking at India as a country and say India is a combination of about 30 odd countries together, because each one is different and each one has a different way of thinking. And the minute we do that, I think this equality would be better. Yeah, but a long way to go in what I would say creating equality for all Indians.
I'm going to take a quick break on that note. We're back in just a moment, to stay tuned. Welcome back with us here on Leaders of Tomorrow. Tonight, we're talking about the art of doing business in the new normal here on the Leaders of Tomorrow Masterclass. I want to pick up on something that you said. Is India educated enough, you said, when it comes to savings and investments? What are you perhaps, as a player in this space, can you give us examples of yourself as to how you're ensuring that you're bringing about that kind of education? I know you put out these not short, snippets on Twitter, for instance, where you're trying to demystify a lot of financial terms, etc. Just walk us through some of these.
Paytm Money, our objective always has been very simple. That we need to get 100 million Indians very quickly on mutual funds, onto equity, onto managing whatever they want to manage and how they want to manage their wealth. So we've done a bunch of things. So very recently, as we speak today, we are running our own masterclass, Sunanda, which is on options, right? So there we have very simple people, very basic first-time users coming in and saying, hey, I want to do my option. We ran a masterclass on ETF because, to give you an example, ETFs is fantastic for a retail investor. The expense ratios are so low, but that you would have an expense ratio of 0.05% as compared to a mutual fund regular, which you take from your bank at about 2%. Now, that education needs to go out. And once we passed our masterclass education, we saw 20% uptake in that. Then we run these banyan tree stories where we try and educate the young millennials. So about 45% of my customer base is less than 25 years old, right? So when we go to those users, they don't consume content in a long form. It's an instant generation. There's instant gratification. So we try and make content meaningful. And for us, I always tell users that our product, which is at the heart of experiencing wealth management, has to auto-train users on two important topics. First is how to take a baby step. And once you've taken the baby step, how do you draw the safety net? Right? So for example, if you come to Paytm Money, you would be able to do your SIP at 100 rupees. You'd be able to do your first gold investment at 1 rupee. You'd be able to do an option trade at 10 rupees, right? See, these are really, really, and the delivery of stocks and buying of stocks is free. ETF is free. So when you're able to bring that in, everybody's interested all of a sudden in trying it out. But after trying, the biggest problem is how do you remain safe? Because at the end of the day, capital protection or what you earn with a lot of hard work has to be safe. So for that, we are trying to automate the product so we make sure that our investors don't do things that are too risky or beyond their risk appetite. So we are doing a bunch of things. And I think education for us is the first thing. And one last example, very recently, we gave the IPO documents in Gujarati and Hindi. And I was so surprised that a very small businessman who runs the Kirana store from Gujarat wrote me a message on Twitter saying, hey, Varun, you know what? I love this. Is the first time somebody made an effort to translate an IPO, and I did not invest in the IPO because I finally understood what it meant, right? And I was happy. It means a customer gone for me, but I'm so happy that he made the effort to write to us.
This next question coming to us from Kritika Saxena. She says, are retail investors looking beyond traditional instruments right now? Like, you were mentioning ETFs, for instance, mutual funds, for instance. Are they looking beyond some of the traditional instruments? Is there more awareness now?
Punanda, first, I'm very happy that Kritika asked this question because it's a girl. And I think, women investing in India has to significantly change. So I'm very happy. That's a very nice question. Is India changing? Completely. So what's happening? I think there are new trends. First, ETF is a very big trend as awareness grows. The second big trend that we see is active management as compared to saying, I'll put my money in a mutual fund in a fixed deposit and let it be. So awareness of people to saying, I want to manage what I'm doing actively. And therefore, direct investing, therefore doing it, looking at your fund returns, looking at expense ratios is happening. The third big trend is international investing. So we very recently, did a marketing activity for Mirai for their FANG ETF, where you could access Facebook, Amazon, Tesla, and so on and so forth. And the response was fantastic. And all of a sudden, you see investors saying, hey, I want to diversify my portfolio. So that's happening. We see a major initiative on gold. Now, all these are alternative asset classes where people are starting to see. And I think the big change, which is not yet seen, which will come in the next 3-4 years, is debt and what I would call hedging using options rather than only making money. So people are going to get into saying, okay, I have this is my return. Can I hedge my wealth using gold? Can I hedge my wealth using futures and options? Can I hedge my wealth with something else? So users are becoming very advanced. Users are starting to be asking the right questions, which is how much do I pay to a mutual fund company to manage my funds? Why should I pay that? What return are they giving me? So I think the awareness is fantastic, and it's a changing India as far as investments and options are concerned.
Our next question coming to us, and I was going to ask you this question if you didn't get it soon enough, and that was as far as bitcoins are concerned. I'd like to, for you to really answer this question more as an investment strategy. You were talking about alternative investments just a short while ago, Varun. So from that end, if you could, answer this question. Manish Chotalia, he says he's proprietor at Marriott Management Services, wants to understand Bitcoin investments, and your view really on that.
My view is, as far as a retail investor is concerned, whose risk appetite is limited, or whose risk capital is limited, or who does not have money to throw beyond a point, right? I would avoid Bitcoin being in India, because the Indian regulator, which is RBI, which is SEBI, which is Government of India, have not yet framed their overall policies. They have not yet come out and said, hey, this is safe, this is how we are going to tax it, this is how we're going to manage anti-money laundering. So is Bitcoin great? Like any other currency or any other alternative asset class, every alternative asset class is good. There is nothing right or wrong. The question is, if I'm a retail investor, what do I want first? If the 10,000 rupees or a lakh of rupees that you're going to put down Bitcoin one day, you don't know who you're buying with or who you're selling to. And if that doesn't bother you and you're saying, hey, look, this is my lakh of rupees, and if I lose it one day, it's cool, then it's a different story. But I know, running a very large wealth management firm, the 99.9% of people would not like that, right? My users come to me to fight with me for every day NAV, even if it is 2 rupees, and I appreciate that user, right? I respect that user. So if I'm getting into Bitcoin, I would wait for the Indian government to make regulations as an Indian, because for us, our bank accounts, our life is regulated in India, our taxes are done in India. So I would be extremely cautious to make sure that there is a right environment and a security. The minute there is that, I think it's a fantastic asset class to go into.
Varun, if there was a thumb rule of sorts, any sort of general rule that you would want to give us at this point, to say you were talking about young investors, this is the percentage that you should be looking at putting into equity versus debt. If you were a woman investor, if you were a woman entrepreneur and you had X amount of money, this roughly should be the kind of breakup that you should be looking at when it comes to investments. Anything you can give us, like by way of general rules?
If I was young and I was 20 today and I was setting up my first demat account, or I was setting up my first investment account, and I was getting into it, and I had, let's say, 10,000 rupees, right? What would I do? I would go ahead and buy one everything, because I think it is so important to get your feet wet in everything to start off. So what does one of everything mean? I would go ahead and take a mutual fund in equity, a mutual fund in debt, a liquid fund, and I would experience the three products, right? I would experience saying, okay, I put maybe 500, 500, 500. Then I would go out and buy an ounce of digital gold, right? Something small, so that I start to experience the product. I would open my demat account, buy one ETF, buy one stock, try one future, try one option, right? Don't go into futures, but try one small option. Once you've done all this, then you start to have a bouquet. And I would do nothing else for the next 1 month. I would watch what is happening every day to my portfolio, right? So if you invest 10,000 rupees, did it go up? Did it come down? Why did something happen? And I would start asking myself every day, curiously, what is changing? So that would be my month 1. My month 2, I would set up my first SIP. I would set up an ETF SIP, and I would set up a mutual fund, local, a mutual fund SIP, either in equity, large cap, small cap, mid cap, as you want. Once it's done, then you also start to see your portfolio versus regular investing. So by month 3, you start to understand the power of compounding, the power of disciplined investing, and the power of, say, active versus passive, index versus all these complex words. Within, I don't know, if you have 5,000 rupees, it's possible. If you have 2,000 rupees, it's possible, right? It's actually possible in 2,000 rupees to do all of what I said, even 1,000 rupees. So technically, it's not about the amount. So I would tell all investors coming in saying, hey, don't jump into it. Don't have FOMO or fear of missing out. Take your time. Have this 3-month strategy. It's always what I tell people. Be disciplined for 3 months. Then you know what you like and what you don't like. For women, one thing slightly different. I think, I'll give you a stat. We measured the performance of women versus men, who we thought are active managers. And women do better than men. And I don't know why, but I think my idea is control of emotions is much stronger, because when you trade, when you invest, controlling your emotions is the single most important factor of success, right? Once there's a discipline. So what we noticed is women are great once they get going. So my only request to women is take your decisions independently. Don't depend on anybody else. but go ahead and take whatever amount of corpus you have and go for it, right? So that's the only small difference I would make between the two.
Completely out of time on this episode of Leaders of Tomorrow. If you have any feedback for us, do let us know. This was part 1. Part 2 is coming up. Thanks for watching. Have a good night. How do you evaluate the health really of your investment? How often should you take stock, and how often should you say that perhaps it's not working, I should exit, look at some other asset?
Look at your portfolio at least once a week. It's worth it. If you're actively managing, look at it daily. If you're passively managing, I would recommend to look at it once a week. Then what I would recommend is once every quarter, have somebody else look at what you're doing, right? And be open to criticism. And most probably this person is not your best friend, right? Either it's a tool that can look at it, or it's a person, it's an advisor, anybody, or it's somebody who you think is professional enough to look at it and say, is it going well or not, right? So I would do that. And one thing I would do every year, annually, is to decide what is your wealth target.
Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. If you have any questions about any aspect of your business, we cover it right here on the show tonight. Masterclass is with Varun Sridhar of Paytm Money. This is part 2, where we're taking in your questions and talking about what wealth management is going to look like and what areas you should be looking at for investment in FY22. Are you happy with the kind of wealth creation that's being created in the country?
The wealth generation quantum is expanding. The opportunities are expanding. So the bottom of the pyramid and a bit above the bottom of the pyramid needs uplift. A company survives on revenues, and revenues, either B2B or B2C, are emerging out of what I would call the internet age, right? So if you are able to increase your curiosity funnel at the top, and that I think is the first thing to change quite rapidly.
I'm curious about what perhaps have been your biggest mistakes or mistake that you've made when it comes to your own financial journey. Varun, have you learned from that?
Oh yeah, so I've made a bunch of mistakes, not one, right? So I've lost a bunch of money in different places.
Okay.
One of the first mistakes I did was I did my first future trade without knowing anything. Somebody called and told me, Varun, good investment, abhi laga do. And I said, okay, I believe this person, and I did it. That person got in and got out. I was working. I don't have time to get into the position and get out. I work, and I'm like this with you, and I can't trade when I'm doing something. And, I lost money. And then I called the guy. I said, hey, I lost a lot of money. And he said, yeah, but I sent you a message. Did you check that you have to exit at this time? And I said, oh, no, I didn't check. And I didn't understand, honestly, what I was doing. Right. So that's one mistake I did. The second mistake I did is I didn't look at my portfolio very actively. Right. I just forgot about it, saying, I've left it to an asset manager. These guys are professionals. They know better than everybody else in the world. It will work, but it doesn't. So I think those are two big mistakes that I have made. One is to believe what I would call a tip or a friend or whatever, right? And the second is I have maybe not looked at my portfolio, what I'm invested in every 6 months. So I made a bunch of mistakes. I'm correcting it now.
What's your view as far as, and since we're in the middle of this, of the pandemic and we're talking health, I really want to understand, how do you evaluate the health really of your investments? How often should you take stock, and how often should you say that perhaps it's not working, I should exit, look at some other assets?
I'll relate that a bit to COVID and try and draw an analogy. Your futures and options are like your hand sanitizer, right? So every time you get out, you sanitize these days. I think be as panicked as that when you're investing in futures and options, because it moves fast. So look at it very, very actively. Everything else is like running, right? So when you have to improve your health, you do marathons, you go to the gym thrice a week, you play tennis, you do a bunch of stuff, you do yoga. And as you do all of that, your health improves over a period of time. And that's a bit like your investment. So what I would recommend is who have a bit of time, and everybody has a bit of time, look at your portfolio at least once a week. It's worth it. If you're actively managing, look at it daily. If you're passively managing, I would recommend to look at it once a week. Then what I would recommend is once every quarter, have somebody else look at what you're doing, right? And be open to criticism. And most probably this person is not your best friend, right? Either it's a tool that can look at it, or it's a person, it's an advisor, anybody, or it's somebody who you think is professional enough to look at it and say, is it going well or not? Right? So I would do that. And one thing I would do every year annually is to decide what is your wealth target. For example, let's say my wealth target is to have 10 lakh rupees as my target. Today, let's say I'm at 6 lakhs. I've made up my mind that 10% of my money is in international equity, 20% of my money is in mutual fund, 30% of my money is in gold, 20% of my money is in X stock, Y stock, right? So you have the split done for you, which you call portfolio allocation. Look at that, and every year look at it and say, hey, for example, is my international equity portfolio, because I've overperformed, right? So I invested 100 rupees, that has become 150. So my portfolio has gone up from 10% to 15%, but my target was only 10%. So get rid of the extra, because you should not change your portfolio allocation over a period of time.
Sure.
Maybe every 5 years you should do it. Yeah. So I would, have a daily, weekly, quarterly, and a yearly plan.
Alfred Paul sending us this next question, saying what sectors are exciting you at this point? Education, healthcare. What is looking good to you?
So more than sectors, right? So sectors was a very traditional way of looking at India, and I think that's what has changed in 2020. So if you're a new investor, I would not anymore look at sectors as pieces. I would start looking at who's getting technology in, who is addressing new business models, new markets, because the pivoting is happening across sectors. So I can tell you, if you're in agribusiness, agri-tech is growing 300%. If you are in the infrastructure business, a company which has great technology is able to deliver far better returns, far better progress, far better output. So one trend, I think, is to look in, irrespective of sectors, into technology. The second trend, I think, is to look for companies that are going behind new segments, new markets, that are creating new opportunities for the new India, right? So if you're into energy, you're looking at companies getting into renewable space. If you're into finance, like I am, then you're looking at getting not running behind the rich guy already in Bombay, Delhi, but running across India and trying to say, hey, can I get customers across India, the new ones, the young ones, and get them in?
Yeah.
It's new segments and technology-led that you should look at rather than sectors.
This next question coming to us from Jhansi Vasudevan. She says, why should one look at investing in businesses like Facebook, etc., Varun, when you have so much domestic opportunity?
Yeah, I think three reasons are very simple, straightforward. First, you should always balance out and hedge your portfolio, right? So the dollar hedge is one, but also the world is changing, right? We speak about Facebook, WhatsApp. These are, the amount of revenues and users that we contribute as India back to them is important. But also, our life is no longer an Indian life. We are very global in our life, right? Most of the products we use just look around. So I would hedge my portfolio. And for me personally, the target has been about 5 to 15% in international portfolio. And international is not just America. International could be America, international could be Asia, international could be Europe, right? But I think one should do that purely from a perspective of international exposure. Second reason, I think it gives you access to asset classes that could have a very high chance of outperformance. If you look at FANG, the FANG ETF, which recently come, the top 10 companies in FANG spend about $71 billion in R&D every year. Their market cap put together is $7.5 trillion. That's 3 times of India, right? So the 10 companies together are big enough to buy out any country in the world, right? So if I was you, I would start saying, my portfolio is my interest. There will always be domestic opportunities, but I would diversify towards that.
I have a question in terms of just wealth management apps, like yourself. You have competitors, including Zerodha, you have Grow, both of which have recently become unicorns, raising large sums of money. Why do you think suddenly wealth management apps and wealth management firms seem to have become really the flavor of the day, flavor of the season? Is that more and more Indians are really waking up to the kind of opportunities, or how do you think the long term is going to play out?
I have a lot of respect for what our competitors and over the last 10 odd years, India has done in the wealth space, right? I think it's fantastic because as we go from a 2.5 trillion economy to a 7.5, 10 trillion economy, what's happening? Wealth is getting generated, wealth is getting distributed. Now, over the last 5 years, technology came in, digital came in, great mobile phones came in, infrastructure came in, regulator came in. And all the right elements were there for India to have, in the wealth tech space, a takeoff. Then COVID came and COVID bought time to people. It's very funny what 2 hours extra every day can do to you. Right? All of a sudden, people started to say, hey, how much money do I have where? What interest rate do I get on my savings account? And very simple questions. Why shouldn't I invest in a direct mutual fund as compared to a regular mutual fund? Right? Yeah. My bank charges me 1%. My insurance company charges me so much. Why am I paying all those fees? And just 2 hours a day for across India gave them that awareness. First. Second thing that has happened is Indians have started to realize the value of having an alternate source of income. Right? Young ones are, I have great hope on young India because they realize things much faster. But they realize that there needs to be an alternate source of income. You can't always depend on your salary or your one business. So how do you create that extra 20%? Right? And that started people to think, I have money, can I manage it better? Is the trend here to stay? So I think it's a very exciting market. Let me give you some numbers. Today in India, there are maybe 15, 17 million active Demat account holders. And the definition is one trade in the last 1 year. Right? And that's not active. You actually have 5, 6 million people. You have only 50, 60 million people doing mutual funds. India has to take that number to about 300 million people. Right? Paytm Money's vision, I have 7 million users in mutual funds. We have 60 million users on digital gold. And we have 300 million plus users doing digital payments. Right? So when you look at those kind of numbers, you start to say, hey, long way to go, exciting way to go. And I think that's the reason you see a bunch of companies focusing on it, focusing on the sector and focusing on users.
I'm going to take a quick break on that note. We're back in just a moment to stay tuned. Welcome back with us here on Leaders of Tomorrow. Tonight, we're talking about the art of doing business in the new normal here on the Leaders of Tomorrow Masterclass. This next question coming to us from Srinivas Kumar. He says, I'm a small-time investment advisor. Are you saying that I necessarily have to move all my services online? Is that going to become the way of the future?
Yeah, absolutely. I think the value of IFAs in India will always remain.
Okay.
The value of advice in India will always remain, but the business model has to change in an emergency, almost, right? Because I think the user has changed. The user is not coming back to the old way of life. Now, if you're a financial advisor, what would I do? I would look at the movie Iron Man or Shaktiman or one of those movies, and I would say, hey, how can you, as an independent financial advisor, manage 10,000 clients? What could take you from managing 500 to 10,000? And the only thing that can take you that far is technology. I would want to equip myself technologically and say, hey, the value I bring versus a DIY platform. And you could say, hey, Varun, Paytm Money is my competition. And I'm very happy if you say that. But what do you bring against Paytm Money? You bring human advice, you bring human element, you bring a nature of trust, right? But I think technology has to be embraced very quickly on three sides: on advice, on transparency, and on user experience. So I think IFAs will need to do that at a network level, at an individual level, because there's almost no choice but to do that and do that very, very fast.
The second question coming to us again from Srinivas Kumar. How do I assure the people who are investing with me as they're moving online that their data is safe and secure? How are you ensuring that at Paytm Money?
Yeah, I think very good question. First, I'm very happy, when I do these sessions and people ask questions on data privacy. It means Indians have finally started valuing what I think is very, very important, which is their data. I value my data a lot, right? If a restaurant asks me my data, if somebody asks me my mobile number, I'm like really panicked. Why do you want it? Right? And I think that level of awareness is fantastic. So first of all, kudos for asking that question, especially as an IFA. What do? We are very strict about data privacy. So we have multiple layers of protection. It starts with a very strong IT security and cyber security ring. The second level is a very important data privacy policy, which we respect and which we get audited again and again, because for us, sacrosanct that your data is your data. Your data is not my data that I can commercialize. And I think that's very, very important. And we need to, as companies, as stakeholders, we need to make sure that that's maintained, right? And third, I think, is to make users who are not aware of the value of their data and data privacy aware of it, right? So, when you sign in terms and conditions, most of the time, people don't read what they're signing. So what we've tried to do on the platform is be very, very transparent. So when you're investing, we are very, very transparent on what you're paying, who you're paying to, why you're paying to. Because maybe at the end you say, hey, Varun, you're charging me, so I don't like it. And I'm fine, right? And I'm fine, absolutely fine with that. So when we launched our stockbroking business, we wanted to be very clear on what our charges are. We put it right out there. And we said, this is what you got to pay. But what that does is the user also starts realizing, hey, my data is safe in a company that is so transparent. And I think there's a proof of that. And yeah, so it's a very important topic. And at Paytm and at Paytm Money, we're very serious about it at the highest possible level.
This question not strictly related to the business that you do, Varun, but coming to us from Gurpreet Walia saying, how do you ensure you're motivating and staying engaged to, you were saying stakeholders when we started off the session, how are you ensuring that you're staying connected to your employees at all times?
It's not easy in COVID and during these times when we work from home, but we've realized this is the new normal and we're never going back to the old world, going to office and be having everybody there and everybody in a big meeting room. And I think that's not going to happen as frequently. It will happen, but less frequently. So this is the new normal. Now, in the new normal, how do you accept and how do you work? So we do a bunch of things. The first thing, right before this meeting, for example, I do a monthly meeting with all my seniors and everybody just speaks for 5 minutes. What did they do in April? What's their plan in May? So everybody gets to talk to everybody. And we kind of mandate that you should switch on your camera so everybody can see each other once, right? So that's one thing we do. We do that across levels, across the organization. So everybody is at least talking to everybody once a month and says, hey, like my team was surprised when I grew a beard. I've lost hair, but the fact that I grew a beard was new for many people who are seeing me, right? I was not looking like this before. And that's kind of nice. It gives you that human connect. It allows you to create EQ, which is emotional quotient still. The second thing we do is do events. So I have a fantastic HR team and at Paytm, we value that a lot. We do a bunch of digital events, right? So digital events could range all the way from playing Tambola to having a talent show, to having painting, to getting kids and family involved and all of that. The third thing we do is we don't mandate because many people, like many times when I'm in a meeting, I'm cooking. Right now, this is the new world. Kids are playing behind. You are, sometimes you just want to have a cup of tea and you don't want to wear clothes to look smart for your boss. You just want to be in the way you are. And that's the new normal. How can we be sensitive to that? How can we be accepting to that, right? And that's important. Having that in your mind that it's okay for somebody to be cooking and doing a conference call doesn't make that person inefficient, makes that person human. And I think that empathy is very, very important. So we're working on all these things. I don't think it's easy. So there's a bunch of fun activities. There's a bunch of serious stuff we do. It's not easy, but I think we're getting there. And we're very happy because overall, I can tell you that I think once COVID is over, because right now we are all locked in our homes and it's important and you have to stay safe. But I think when COVID is over and work from home is the new normal, the satisfaction of employee and their families is going to be 2x. Because all of a sudden, you have more time to spend with your loved ones or in things that you love doing, right? So that's going to be very important for me.
Varun, I want to talk to you about regulation really and keeping pace with the work from home. And NASSCOM, for instance, pushing for a policy that will be cognizant really of this entire move to work from home, taxation for things like laptops, chargers, just the broadband, in fact, that you're using in your home. No taxation when it comes to the kind of allowances that you get for commuting to office back and forth. Do you feel perhaps there's a long way to go, that there's a huge gap that needs to be addressed?
What I love about being in India is I used to live in Paris till 2015. Right? And I could crib about things and nothing would change for 10 years. Right? So I left India and I was outside for 2 years. And all I could do was complain and I knew things wouldn't change and nobody would hear me. Right? What I love about having been in the new normal in India is people are listening. Government is listening. The regulators are listening. The stakeholders are listening. The journalists and the media fraternity is listening and taking the voice out there. That's the fun of being in a democracy which is vibrant, where we can openly speak. And I think regulation, taxation, support systems will evolve. At Paytm, we've moved at rapid pace the minute we realized. And so we've given our employees broadband allowance. We've gone ahead and done some of those things because we know that working from home involves a certain cost. Working from home is different. The costs are different. It's not that the costs have vanished. Maybe my cost of clothes have been shifted to cost of broadband. Like I have 3 connections at home, right? And I need it because I know if one day if something goes wrong, I can switch very quickly. Right, but that comes at a cost. But I think the regulation will evolve. I think all the authorities will evolve. and we will be allowing in a good way the new normal to happen, because the new normal is important for India to succeed.
Sure. This question coming to us from Weber. He says he's a pricing analyst. He wants to know your opinion about cost cutting for profit maximization.
Well, it's a bit like whenever somebody asks me, what do you think about cost cutting? I say, hey, it's like my body. During COVID, I've put on a few kilos here and there, right? And once in a while, I need to go and run and, cut flat. It's important. What is important for companies to do is consistently relook at the cost structures you've created, small or big. Because behind everything, and we always look at cost as rupees, but the single most important cost to look at is time, right? How much time do you spend in meetings? How much time do you spend working for reporting to somebody who doesn't read your report? How many MISs in large organizations just get produced and nobody reads them ever, but there's a huge amount of cost going in. Right now, I think that's flat. So when you do cost cutting, one of the things you want to do is to make sure that cost cutting is not happening for productive elements, for elements that ensure your user experience is good, your employee experience is good, but you want to cut costs, which is unnecessary, and reallocate them to more productive purposes. So I always think it's good every 2 years, 3 years to relook. I relook at myself and say, hey, Varun, you're at 40, you're becoming a bit bigger, maybe time to do a bit more exercise, right? But it's just that. And it allows me to be fit and allows me to go forward and live the next 10 years better.
Okay, so since we're speaking of cost cutting, I do want to ask you, we're sitting at the beginning of the new fiscal. Where are you going to be looking at making investments for FY22?
I think our investments at Paytm Money are going to be in technology and in product. Okay. We think that there's only one thing to do rightly, which is to build fantastic, simple, easy products for our users. And as long as we keep doing that, so for example, in the case of Paytm Money, we're going all out on our equity, futures and options, and the education businesses, where we think to train people how to manage their money, then to give a platform that makes it simple and easy is important. So technology product is my first port of call, because then we can truly get 100 million Indians to save and invest their money in a technology, in a digital, simple way. The second investment we want to do is in customer experience and customer service, because I think that's important. It's a tough time for everybody, and people are maybe under-realizing the value of mental health, under-realizing the value of anxiety. So I have investors who normally would be okay if the markets go down plus minus 5%. But when it does that today, they're far more anxious. So I think customer service, how you manage those periods are going to be important. So these are the two things we're going to work on for 21 from a business perspective.
All right, Varun. Do you have any advice that you want to leave someone who's logged in with today, as we've run out of time? I'm going to wind it down with this, with your advice really for someone who's logged in to say FY22, this is what perhaps you're going to be working on, whether it's personally or professionally, and it's your advice for them.
Is 2020, in my opinion, personally, to 2030 is going to be India's single most important decade. It's a great moment for everybody. Please embrace it. COVID is tough. Please wear your masks, double mask up. Please be safe. COVID wave 2, I hope, comes to an end. Please help people around you in the short term. But if I look at 2020, 2030, single best decade to be in, take risks. If you're a young person, go ahead and start in a startup. Think if you can run a company yourself. If you've not invested till now and you're not managing your money, please do that immediately. And spend some time with your family and friends and try and be safe. That's my only last message.
Absolutely. And thank you so much for that, Varun.
Thank you.
That's all we could manage to pack into this 2-part special of the Leaders of Tomorrow Masterclass with Varun Sridhar, the CEO of Paytm Money. If you have any questions about who we're hosting next or when the next one is coming up, head on to our website, the details of which coming up on your screens as we speak. Thanks for watching. Have a good night.